During the previous video, I gave a simple risk management calculation using the Euro USD pair. I hope that was really understood. I'm going to make more examples to that effect so that it gets to sink within us, such that before taking your trades, you really need to understand what you're going to risk. Now, I'm going to explain what happens between two traders that have different capital base or decided to take that trade. Now, remember, we had used 5 mini lots. Okay, we actually used 5 mini lots, and we are looking at risking 100 pips. Okay, now I've got someone who has got say $46,000 in his trading account, and I've got some other persons that just got about $46. Of course, they decided to take the same trade. Now, so they decided to take the same trade. Remember, I said one person or one trader has got $46,000 in his trading account. The other guy has just $46. Remember, they actually taking 100 pip risk, right? And both of them decided to go for 5 mini lots. 5 mini lots. No, I don't know what to use. Both of them decided to go for 1 mini lot. Okay. Now, for 1 mini lot, 1 pip movement equal to $1. 1 pip movement equal to $1. Now I'm going to explain. If you look at the chart, we're actually looking at Euro USD pair, right? Both traders decided to sell at 1.0833. Both of them decided to place it. They entered at that point and they placed their stops at 1.0943. Yes, 1.0943, and they took their trade at about to place their stops at 1.0943. So they're actually risking 100 pips. Now, they placed sell order. Now, when you place a sell order, you're hoping that the value of that pair depreciates. That means they were expecting the price to keep going down from 1.083, keep going downwards, say 1.0822, 1.081, just like that, keep falling. But unfortunately, you know, the Forex market doesn't really move in a straight line. So it's possible he made some kind of retracement move, like a bullish retracement, like he tried to move above, tried to appreciate a bit. I remember placing that sell order. If the price starts appreciating, you're going to be losing your monies. Now, let's assume that pair actually moved from, within the first 2 hours, it moved from 1.0833 to about 1.0873. Now, from 1.0833, and it moved upwards, of course, against their intention. They were hoping that it's going to depreciate, but the price actually went from 1.0833 first within 2 hours to about 1.073. So when you look at the difference between where their entry price and where the current price of that pair, is about 40 pip difference. Remember, I said 1 pip equal to $1. That is for a mini lot. Now, if that price had moved from 1.0833 to 1.0873, 40 pips, then at the time it moved from 1.0833 to about 1.0873. Now, from 1.0833, and it moved upwards, of course against their intention. They were hoping that it's going to depreciate, but the price actually went from 1.0833 first within 2 hours to about 1.073. So when you look at the difference between where their entry price and where the current price of that pair, it's about 40 pip difference. Remember I said 1 pip equal to $1. That is for a mini lot. Now if that price had moved from 1.0833 to 1.0873, 40 pips, then at the time of that price, after 2 hours of taking that trade, both traders will be in the red. They're going to be losing $40 because they're actually losing 40 pips against their sell trade. Now, just like I said, 1 mini lot equals to $1. So 40 pips, they're going to be losing $40. This guy has 46,000 bucks. Of course, he's comfortable. That's okay. My intention is to lose just 1% of my time. 1% of my capital is about 460 something bucks, since he has about 46,000 bucks. Now the other guy just has 40 bucks. What happens to him? Taking the same trade. Of course, this guy should be almost thrown out of the market because he actually took the same trade, but he didn't really consider his risk based on his capital. So this guy at 1.0873, the market is going to kick him out automatically because it's going to be like in a red of minus 40 bucks, which is same. And once your capital becomes equal to the current losses you're incurring, the market is going to yank you off. So this guy goes out of the market, and the other guy with 46,000 remains. Of course, he remains in the red for first 2 hours. Then probably after the next 4 hours, he made an impulsive move downwards. Like he actually went in his favor after like trying to do some level of correction upwards, and he moved down. Just like I said previously, it's not always a straight line. You don't just place your trade and it goes in straight like that. No, there's always these there is this battle between the buyers and the sellers. So at the end of the day, it takes patience, understanding what you're doing, and allow it to do what he wants to do and take your profit. So this guy was still in the market, losing 40 bucks, but after a few hours, the market retraced and started depreciating. Went back from 1.0873 down to 1. It takes patience, understanding what you're doing, and allow it to do what he wants to do and take your profit. So this guy was still in the market, losing 40 bucks, but after a few hours, the market retraced and started depreciating. Went back from 1.0873 down to 1.0833, which was his entry price, and kept going down, kept depreciating, and depreciated down to about 1.08. Of course, he's going to be in profit at that point, maybe after 8 hours, because from 0.833, which was his entry, down to 1.0800, which the current price was after 8 hours. It's going to be 33 pips, which is equivalent to 33 USD. So this guy is going to be making profit after say 10 hours, because first 2 hours the market retraced and they were losing some amount of money. This guy was patient, but this guy was taken out of the market within the first 2 hours. So this guy, the other guy, actually understood what risk management was, but the guy with 40 bucks didn't do his risk management analysis effectively. In fact, one would have expected him not to use the same lot size as the guy that had the 46,000 bucks. He would have just used a micro lot. A micro lot is about 1,000 units, but he actually joined this guy in using a mini lot. So understanding how this works, it's going to really help you maximize and grow your capital in the long run. Now, I've had a friend that actually grew $100 to 2,000 USD. I've also had someone who actually grew $1,000 to about $10,000. So it takes consistency. It takes understanding your capital, understanding the level, the lot size you're supposed to take based on your capital. You don't just make rash decisions and you just pick whatever lot size. And if you look at your MetaTrader 4 or MetaTrader 5 app, you find those numbers upwards are actually the lot size. So when you find something like maybe 0.1 is actually 1 mini lot. If you find 0.01, that means if you choose that one, you're actually using 1 micro lot. If you decide to take 0.6 is 6 mini lots. If you want to take 6 micro lots, you're going to make your adjustments on the screen to 0.006. So hope that helped us understand better. So I'm going to also do a video on Canadian dollar JPY and the other JPY pairs. I'm also going to explain to us risk management on gold too, because gold is a different has a different risk management calculation, as well as Bitcoin and Ethereum. Until then, have a good one.